If you watch my video on Saturday, I literally was predicting whether the Trump versus Elon Musk fight and public tussle that we saw was going to affect the market. And what happened in the charts? We saw a downturn in the market. So I was looking at it with a view of understanding if we're going to sustain that downturn then, and if the market and the price action had changed direction to the downside. I was anticipating and thinking that will give us a continuation to the downside, which led me to actually take a short position yesterday, which I got stopped out on. And I lost that trade, but thankfully I was able to put a tight stop loss, which took me out of my trade, and I wasn't in so much loss. I was just in a loss of, as you can see here, $13. So that kept me, my capital preservation was still key and still kept me in my trade, and I still have capital to trade and to live to fight another day, which is the most important and still goes according to the strategy and my rules that I had set last week. If you paid attention to the other video that I had already shared last week, also make sure you guys watch, like, and subscribe, and follow me with all my videos, because I drop a lot of gems and a lot of things and a lot of knowledge that you guys can learn from. And I myself, I still learn, and I always watch it back so that I am still versed, and I remind myself of all these things and I stick to it, because that is really key. So we just jump right into the chart to see what has happened. And what it reversed, it literally reversed from the downturn we had. The whole Trump Elon Musk saga clearly was a fake out to the downside, trapped a lot of people like me into trade, thinking we are going to continue with downside movement and thinking that the price action had reversed. This tool looks at the levels and gives us accurate predictions of where the market is going in the near term. So we look at the Fibonacci extension, and what do we see right here? We see that now, let me just zoom in so you can see a lot more, and it will be very clear for you guys watching this. So you can see right now we have the golden pocket, and the golden pocket is a level that is quite interesting. And right now we seem to, the golden pocket, let me just explain the golden pocket a little bit. The golden pocket is one to watch out for, which is between the 0.16 Fibonacci extension levels and the 0.786 levels. And what do we see that is happening here? We seem to have gone above it, and right now we seem to be testing the high of the $109,500 levels, which is the Fibonacci extension. So this is quite interesting, and we'll be watching this like a hawk to see if we can sustain this and keep the 109,000 levels as support. If we can turn this level to a support, that shows that a bullish momentum is on the card, and we are broken out of this descending channel that we seem to have been doing in the last few days or the last few weeks, and we are turning bullish much more, and the pattern of the chart has turned structurally bullish in the near term. This is quite interesting. So this is what we'll be looking at. Then we look at what the CPR indicator is telling us. It's also giving us a reverse to the upside, and now we have broken out of this descending channel, and it shows us that we are attempting to continue this bull run to the upside. And if you even look at the Fibonacci extension, what is this telling us? We're telling us that we have a high even after crossing the all-time high of $111,000 levels, that we have another level that is quite interesting for us to be watching for, will be the $119,000 levels. So remember last week there was a video I had actually posted. I can't remember which one it was, but one of the videos I posted last week was indicating and predicting, according to I think Bob Lukas on Twitter, one respected crypto trader, was also predicting something around the same levels. So he was predicting $120,000 levels. Right now, Fibonacci retracement tool is telling us we have something around $119,000 levels. And I would be, because I like to be conservative and not really follow all these tools, all these indicators, so I would rather go to something like 119, 118, 116 kind of levels around that zone, because really it's all about zones. It's not about a specific figure. So if we are looking at the zone, so we should be expecting a high of around 116 to 118, $119,000 levels. If that is pending we break above the $111,000 levels, which is our current all-time high, in anticipation of a new all-time high. So this is what we'll be expecting. So we should be looking, I'll be paying attention to this chart, and I'll be looking at it as a hawk, because this golden pocket is very critical and something to watch out for, and a place that if we can sustain it and claim it as a support, that is indicative that the bull run in the near term is back on and everything is structurally bullish, and we continue an upside swing to the top, and we'll continue to move into that. But how do we look at what crypto fear and greed index is telling us? We are at 71, so we are going deeper and deeper into greed territory. So clearly, of course, once we start to go into deeper and deeper into greed and extreme greed, that clearly would also be telling me that we should relax and we should watch the chart, because clearly the market makers like to do is to use the opportunity to wash out a lot of long and especially leverage traders in the market. And what do we even see when you look at liquidation heat map? You can see there are less people just like me in the market. Just like me, I was faked out and I thought we were going to continue a continuation to the downside. I got stopped out. A lot of folks, as you can see clearly here, a lot of folks. Also, there's a lot of short positions. So you can see there's a lot of shorts around $106,000 levels, which is quite interesting that there's a lot of liquidation around that and not a lot of longs in the market right now. So this is quite interesting that a lot of people are not really taking a lot of longs, but a lot of short is in the cards. So it's quite interesting that we have been able to establish this. What we will continue to watch is if we maintain this, if we maintain these levels, if we maintain the Fibonacci levels, and if we continue in the upside in the near term. We would continue to pay attention to these levels. We would be watching the market like a hawk, so that we'll give you and we make you guys better traders. Make sure you like and subscribe to my videos, because it will keep you ahead of the market. It will make you spot opportunities so that you can take a trade and make money in this volatile asset market class. I will be seeing you in the next video, which will be tomorrow. So stay tuned, like and subscribe, watch the videos, share to a friend, and don't forget, we are here to make money. Zero to Ferrari. I'll see you later.